All right, everyone, welcome. Welcome to this special edition of Charts by TRADEway. I am excited for this webinar. I've been planning this one since October. It's been on the calendar of like, oh yes, we need to do this since last year, January. So very happy to be here again. We did a very similar webinar last year in January where we talked about all the new additions and features that were added in the previous year. And we want to do the same thing this year. Guys, I'm going to introduce Rance to you in just a minute here, but Rance and his team have been working very hard this last year, and they have added in a plethora. That's a good word for you. A plethora of different features and additions into our platform, Charts by TRADEway. And so Rance is going to get a chance to just highlight those for you. Some of those you've probably already seen. Some of them may be brand new to you. So that's our hope right now, so that we can bring you new tools to help accelerate your trading. So with that, Happy New Year, everyone. We are glad that you're here. Again, we want to take a look back into last year now and see everything that we did. That's really the purpose, so that we can help improve your workflow and trading experience as well. Guys, many of you guys have already posted in the chat. Let us know where you're from. We're excited that you're here. Say hello to everyone. Also, the Q&A, you can go ahead and put questions in there. However, keep in mind, while you can put questions in there, this is not necessarily a webinar on how to do this or how to do that. We're really trying to introduce these new features. We definitely have plenty of other resources. However, we'll be going over those later on. At the end here, I'll share some more training resources for you, so that you've got resources for all things that are Charts by TRADEway. But leading us today, I want to introduce to you Rance Masheck. And we also have Steve and Lori in the background. They also are going to be able to help answer questions, and I work very closely with them as well. But Rance Masheck, he's someone that many of you are already very familiar with. But if you're newer to TRADEway, you may not have met him yet. So Rance has decades of trading experience. He's also done trading education. He's been in the seminar business. In fact, for some of you guys who got to see Steve Champa speak on the big stage, Steve Champa learned how to trade from Rance. So Rance has plenty of experience. It is a privilege to have Rance here. And he has also created our Charts by TRADEway platform. So I'm very excited to introduce him. And so, Rance, I'm just going to hand it off to you. How are you doing today?
I'm doing excellent. Thank you very much. And, I got to say that it's been just a joy working, our teams working together to create this. And we've been really busy in this past year. And we also have a lot of real exciting things coming up this year. And look forward to sharing this today. And, our whole goal here is to make people more efficient at what they're doing and making them more effective in their training or their trading. And so that's been our focus and the features we've done. And I look forward to sharing some of these with you. So what I wanted to just share here is, we have a kind of an outline of some of the things we did. So I'm going to kind of just work through this. If you do have questions about a feature, about something online, please feel free to put it in that Q&A piece and we'll try work it in here. What you're going to be seeing today is, so this is the Charts by TRADEway platform. I'm in my dev system here because I'm going to show you a couple things that are coming out also. So I'm going to be kind of bouncing between them mostly on this one day, but same thing. Just got some things in the works here that you'll get to see. So let's start out with we did in the actually this prior year, we're in 24. So in the latter part of 23 or 22, excuse me, we started really working on expanding our data, especially around fundamentals and that and really honing that in. And so what that did was it gave us several new things, and I'm going to share some of that with you here. One of the things it did was in our screener. Now, you know that there are some system ones, not in this one, in the TRADEway one. There we go, in your guys' one. There's some, some system ones that we have, and then Of course, you can save any of your own screeners that you want to. That's still there, of course. But one of the things that we did here is we have really, really expanded the amount of data that we have. Now, when you come in and you see this at level 1, you're going to see pretty much what you saw before. There's a couple of them we added to this, but most of that's going to look similar. Where you're going to start to see a lot more is when you go to level 2 and level 3. And I'm going to go straight to level 3 and show you this. If you look in, especially in fundamentals and key ratios. So if you look on this key ratio side, you see how much we have going on here now. So many added data points there. And then also on the fundamental side over here, you're also going to see that we have added a bit, quite a bit there. And in doing this, just as a quick little comment on this, what we are, we're actually in the process of redesigning our the navigation of this, because there's so much more that we've added there, and we feel like we could do a little bit better job on getting through some of that. So we're working on that as well. And the I just had a little hiccup there. There we go. All right. So, but anyway, but there's a lot of data points. A couple of things I just want to highlight on this, that just in some groupings of information here. One, you'll now see that there is industry ranking information on a lot of these. So, for example, if I wanted to look at PE, I'm going to go up here to let's go to we have our PE ratio there, but I want to go to a couple of things here just to show you this. So if I were to, in fact, let's just keep it simple. I'm going to go with just that one, the PE, just to show you this. So what will happen here is that when I run this search, you're going to see what their PE is, but you also see this. This is that the PE industry rank. So this is where they stand within their industry group. So if I were to go flip this around, you'll see here that these are some of the best in class. Now, why is this over? Why is the industry group? And this is actually an important thing for several places through the platform. When you see the rank, and you see that it's over 125, in this case, over 100%, in this case, 125. What that means is what we did for industry rank is we looked at mid cap, large cap, and mega cap. So in these cases, what you have here is you've got a smaller cap stock that's outperforming what the mid cap and large caps are doing. So that's why that can be over 100%. But you can see what these are on a whole bunch of the data points. So when and if you bring it in, it'll tell you what the data point. So this is the PE. So when you look at a rank, it'll bring in the root data point as well for you, just so you know that. But then you can see how it's ranking within it. So if I were to go in and add a let's say a market cap, and let's say that I'm going to add a industry group, what you'll see here now as I do this, let me go with 2 billion, and for my industry group, let's just go look at just one of these just to show you how that works out. So now you'll notice that the rank, if I sort this, the rank won't, because 2 billion is your mid cap and larger, so you won't see anything over 100% rank because I'm not looking at the small ones anymore. But you can see how they're doing on this, and you see that ranked all the way down, percentile wise, how they're performing to their peers. So it's a really nice feature to have, to be able to do that. When we get into a lot of the areas like volume and a lot of performance metrics, a lot of the key ratios, a lot of fundamentals, now we have that ranking in there as well, so that you can see how it stacks up to its peers, as well as just a whole lot more data points in there as well. So what this did, besides adding all these data points in and the industry rank stuff and all that, we also did another kind of major shift in our watch list. And so what we've done in the watch list now is, instead of having it be a fixed view, you can have multiple views in here, and you can create any view you want. And when you create that view, you literally have, like, we broke it down by by sections here. But if I wanted to look at my valuation here, I have like my PEG ratio and my whatever else I want to pick out of this, and so you can choose whatever fields you want to create your own view in the watch list. Now, what we have here, just for you to know this, we have some system views in here. And then we also have so what you'll see up on top here are the system views, and then down below are your own personal views, however you want to look at that. So, for example, if I go here to performance, you'll see here that it looks at, the 7-day, 21-day, 39-day, 6-month, 200-day, so on, all that on the performance on it. So this can kind of give you an idea, if you're looking at this, what we see that's, long-term going up, and and then there's some of these short-term going up, but you can also see some short-term that are down or long-term. So it gives you a little bit of a better kind of overall view of performance over that time. It also shows you the 52-week, and this is just, I'm not going to go into each of these views, but I want you to get an idea here that you can set these up to your particular needs. So here I'm showing the 52-week high and low, and I'm showing here where it's in that percentile. So 100% would be a new high. So this is very close to a new high right here, 98, 96. And then you have other ones that, the lower one, if it's close to a new low, it's going to be close to that zero, right? So new high would be 100%, zero would be a new 52-week low. And then it also tells you here how many days since it, so you can see it all 98, like way up there. It's only been 2 days since it hit a high, right? For American Express. Right, so you can really create these views the way you want. But the thing I want you to kind of get on that is not that you can create whatever your normal way, however you want to look at it. But one of the other things that you can do here is you can create views for specific ways that you're trading. So, for example, I do a lot of stuff with options. Right, so I have a view specific where I'm looking at put call skew, I'm looking at call volume and put volume, and what the call put open interest ratios are, IV ranking, all that stuff on here that's very specific to options, and that I might find that a really good way to look at it. So one of the things I just want to share with you, sometimes people go, oh, I want to look at these things, they just create a view and that's it. What I would say is, you can use this to create different views of different scenarios that on how you're trading, whether it's maybe a shorter term thing or, again, options focused or whatever. So it gives you a lot of flexibility to really create that the way you want. So so that is a little bit on the watch list. Now, what happened was, when we expanded the screener data, we then brought that in here to make this available in the watch list as well. So all of those, when you go to create one, all of those data points will be here in these different areas. We've kind of obviously grouped them by key ratios, fundamentals, so on, for you to be able to use. So we took that screener data, expanded it to here, and made that available to you in this area as well. And then we took that even further, and we really redesigned. So if I go over here to the dashboard here, I'm going to go to Apple for a moment, and we really stepped back and looked at how we were doing fundamentals and our valuation pages from that. And so we completely redesigned. Now that we have additional data points, additional information, more in-depth data around the fundamentals, we decided that we would rework the fundamentals page and the valuation page, change that to key ratios, because there's a lot more in it. So let me just share with you here a little bit of what we're talking about, what we have here. So what we did here, we had our earnings before, brought that more, up into the left, front and center, so that you can see that. But we also now have both, so this is the reported data by default. So you see the actual here, that green line, that's what the company reports when they're, on CNBC or, publish it out. That's what they report. Well, there also a lot of times is additional ones here. One is GAAP and one is diluted. Now, in the case of Apple, these are pretty darn similar. If I go to ABVB, I think there's actually a little bit of a difference here. Not really, not that much on those, but sometimes you'll see a bit of a difference in a GAAP. A GAAP is the general accepted accounting principles, which will have write-offs and different things in it that they may not have in their normal reporting. So it gives you a chance to see that, and you can just turn on and off what you want to look at the time. Okay. So, and by the way, that feature of turning on and off data points on the legend is throughout the platform. So earnings is there. What we added then was we have our dividends part now, where we're showing you dividend over, multi-years. In this case, it's 2014 on Apple. If I went to something like IBM that's been paying out longer, actually, we're still only going back. We're going back that 10-year window here. But it also shows you here what their dividend yield is, and payout ratio, which is what percentage of their earnings are they giving up in dividends to you. Then the number of years where it's been positive payouts. Now, what I mean by that is they've either been stable or increasing. So in the case of IBM, it's been almost 11 years since they've had any kind of a drop in their dividends. So as it shows the stability of that. And then it shows you the amount that's paid out each quarter and the annual amount. And then we also, it shows you the next date, right? All that's there. So we also show you what the industry average is. So they're paying out 4%, 4.11%. The industry average for this is only 1.16%. So it also shows you the rank. So they're at the 98th percentile of this industry group in paying out dividends. Now, if I were to go flip over here to Apple for a moment, what you'll see is Apple's a little cheap with that. They only pay out 0.5% yield. They're only paying out 15% of their profit, and they rank on the on a percentile ranking only 16% on this. So you can see that they're really kind of holding it back, right? So so it gives you a little bit of context to that. And if you're doing things like where you're owning stock and doing covered calls, stuff like that, where you're going to benefit from the dividends, that it can be a really important factor for that. So we've now included that. We also have here we have our price projection. We shifted this a little bit where we have the yellow line here is the price projection based on our model, which is looking at what it did do and extrapolating it forward. What you're seeing over here are the low, mean, and high of what the analysts are saying, which is taking into consideration not only what they have done, what the growth rate has been and all that stuff, but they're looking forward at additional stuff. And you can see here where that's at. So what this is this is a 1-year projection. So this is a 3-year history. So we kind of keep it proportionate, 3-year history, 1 year forward on what the analysts think are going to happen there. So, again, that information available there. Then we have in here your financials, right? The main financials are your profit and loss statement, your balance sheet, and your cash flow statement. And what we've done is we've created them in this format so you can see this very easily. But if you want to pour into the numbers, just to let you know, so this is profitability, that's P&L, right? I can click that. And now I'm looking at the profit and loss statement. So we color code it so it's easier to read on what's increasing and decreasing. And you can expand this however you want. You can dig into a particular area, or you could do it by grouping. So, this is the consolidated statement, but if you want to go detail, it's all there. You can go look at it if you want to pour over that. What we find is most people would rather see it this way anyway. So what you're looking at here is and I want you to understand that literally this is the P&L statement. So let me share this with you really quick. This is your total revenue right here, and this is your net income right here, right? So for each, they just let's pick the most recent one here. They did again, we're on Apple. They did 383 billion in sales, and they were able to take 97 billion of that and as net income. Well, where did the other money go? Well, it went to things like cost of revenue or operating expense or other expenses that they might have, right? So what this is, just as a quick thing, cost of revenue is you're selling iPhones, you got to make the iPhone, right? So it's your cost of goods or what it's costing to make that. So you're able to see that as part of that. So if you want to explore into this a little bit more, and if you think about this, just as a way to think about how to use this, cost of revenue will generally go up when revenue goes up. Because in fact, let me simplify my screen here so you can see this. So what will happen is as sales go up, the cost, I got to make more iPhones, right? So it's going to cost me to do that. However, if you look at something like operating expense, you don't have to open, another store. You can be more efficient at the store you have, or the employees that are doing what they're doing, being efficient. So your operating expense shouldn't go up that much as your revenue goes up, right? So it gives you the ability to do these compares and look at it the way you want to there. Then, because the two main ones here are revenue and net income, what we also do is show you down here in a period over period, whether it's increasing or not. And if you look at this, they're pretty flat. In fact, their revenue is actually down just slightly from June to September. This just a fractional amount, but it's down. But they managed to have their net going up. So these look pretty tight right now. You'll see ones that are in, when companies are in good growth rates, you'll see that much more of a so what you're seeing here is this is flat. I mean, this is exactly what it's telling you. This is flat in its earnings and its revenue, versus if I were to go to something like, I'm going to take a guess here. It's not a great one for that. Yeah, so here we have JP Morgan that's both going up in their revenue and growth a little bit, right? So it gives you a chance to it just magnifies what's happening with the trend for revenue and the trend for net income. So you can see that a little bit better, or in this case, that it's pretty flat. And then you have your profit margin over time too. So this is your P&L statement, right? So, and then you have your balance sheet, and the way a balance sheet works is, you've got assets minus liabilities equals equity, right? And balance, so these should generally be the same size. So this is your assets, long-term, current assets and long-term assets, your liabilities, that's the regular liabilities, long-term LT liability, long-term liabilities, and then where the equity is. So if I'm looking at, are they growing their equity? And again, I could turn these off and just look at equity. And you're seeing that, not exactly here, growing equity at Apple right now, just because they're a little flat in their sales, flat and some stuff. But it gives you the ability to look at that balance sheet visually. And then, of course, I want to go into that balance sheet, right there it is. And I can expand this into whatever level I want to look at this and be able to see any of the items on there. But what we've done is just we've put it together in such a way that this is now all balance sheet. So this is debt to equity ratio, which is an important metric, asset growth, important metric, and then the overall balance sheet. And we did the same thing on cash flow. The only one I want to mention here, because I want to make sure we get through everything today, is one of the things we did was we put operational cash flow and free cash flow on the same line with the same y-axis here, so that you can see. And what that really comes down to is this is how much they're making from operations. This is how much they got to keep after dealing with debt service and, other elements of that, investing cash, all that. So, when the closer the free cash flow is to the operating cash flow, the more money that they have to distribute, go to the bottom line, all that stuff. So they're still making money in the operations, but that money's been obligated. The difference between free cash flow and operating cash flow is that is how much they got to keep of what they were able to generate. So an important metric. And when you see companies in trouble, you'll see that the gap between these two start to widen. Right. So again, a nice way to be able to look at that. again, very visual, but much more in depth than it was before, much more logical in its approach. And then you can go into any one of those, P&L, balance sheet, cash flow statements if you want to. So again, along with that same line, the other thing we did was we really expanded what was valuation into we changed the tab here to key ratios, because valuation were these metrics, your PE, your PEG ratio, price to book, price to sales, so on. But because of our expanded fundamental data, we now have all these other key ratios that we can look at. So one of the things we did here is, here's our profitability ratio. So what's my earnings per earnings per share, and we're looking at this for the most recent quarter, and we also look at it TTM and so on. So there's a little bit different views on some of this we'll share. So what we're seeing here is, if you look at here on, let's just look at PE for a second. So the 3-year range for Apple's PE has been between 20 and 38. The current is right here at 29. The industry group is running at 27. So again, you've got some context here that you didn't have before. So we're showing you what and PE. By the way, some numbers should be lower, some numbers should be higher. So while we spell this out, if you hover on any of these, what you'll see here when you hover is a tooltip will come up. Actually, if you click, it should be a tooltip. You can see a tooltip on it, and it explains what any of these data points are. So if you don't know what, if you don't really understand what enterprise value is, I could click on that. It gives me a definition, right? So, but one of the things we did here was any of them that should be a lower number, lower is better, we put an asterisk on it. If higher is better, like enterprise value, higher is better, there's not an asterisk on it. So it just is a really simple way for you to go, oh, lower is better. That's lower. So if I look at this, here's where the industry group is. Here's where Apple is. So Apple's a little overvalued compared to the average of the industry group. So in fact, they're about where they rank in the industry group is about the 30th percentile. Now, what's interesting here is their PE is a little rich, right? They're a little high on their PE, but they're a cash flow machine. Operating margins really good, profit margins really good. If you go down here to cash flow, their operating cash flow and free cash flow are best in industry group, because that's what that is. This is how it is in the industry. And if I'm looking at this going, well, okay, the PE for them, this means that they're just a little overvalued, right? Because compared to other stocks in the industry group. Well, I go, well, wait a minute, what would be best in class there? I can click, you'll see the little pointer come up, right? If I click here, what it's going to do is it's going to show me the stocks within the industry group, and it will show you the PE value, and it will also show you where it ranks compared to other stocks. If I decide, oh, well, wait a minute, Sony's looking pretty good there, I want to go look at Sony, I can just click that and it'll take me right over to Sony. Now, I'm not going to do that here because I want to stay on this. But so if you want to see how something's doing, you can do it. And if I look at this, let me show you IBM really quick because it's kind of interesting. You can get into the real details of this, but I'm going to tell you a better way to use it. A better way to use it is what's going on overall. Right, so I look at IBM, look at this, all this green arc stuff, all up in the 80 percentiles here, and their profitability, they're doing really, really well in their profitability. So the growth, some of these don't have a ranking, that's NA, right? So that doesn't have it, just not there. The net change in their earnings is really strong, best in class there. Some areas of good debt to equity rate, good areas here, some mixed areas in the financial strength piece, but some of them good there. And then if I go down here to my cash flow, which is, and by the way, that's part of why it's in this order, is I got all the stuff that comes down to how much cash did I get, right? And look at how they're striking on that. I have to go in and look at each individual one. I can just go look at this going, man, they're pretty strong. If I go look at Apple valuation, a little overvalued right now, but good profitability. mixed a little bit on the cash flow, but the ones that really count are operating and free, and you're saying they're doing really, really well on those, right? So it gives you this context of both, tells you what this company is doing, right? It tells you what the industry group's doing, what the S&P is doing, and shows you the range of where it is and how it's sitting there, and then what its rank is compared to others in industry groups. So a lot more information now, a lot more context in the key ratios. But just again, rather than getting overwhelmed with all the data points, you kind of want to go back and look at what the overall trends are. That's a better way to use it for a quick analysis. The other thing we did, though, was we realized that depending on how you're trading, certain ones are more important than others. So I have a default view, which is a very well-balanced view of these ratios. However, if I go up here, I can look at a swing trader view. So I'm looking now at the data points I care about for a shorter term trade, right? So you'll see different quantity of them up here, different ones that are coming up. If I'm doing something that's more of the longer term investor view, where I'm holding for months plus type thing, there's certain things that are going to be important for me there, and so those are what's going to come up. So to know what to look at when, we've helped you out there. So you can look at the default view, which is a good balanced view, but then you can go in, hey, if I short term, really short term days, week, position, weeks, months, investor months and beyond, right? So it gives you a nice way to be able to look at what that is. Additionally, we do have up here, I'm looking at Apple, so I go, oh, well, it's in the computer, the hardware equipment industry. If I click this, I can see all the other stocks that are in this. And if I decide, hey, well, what else is, large market cap there? Well, we got, Sony, which came up, that came up before. So let's go take a look at that. I can click it, and now I'm seeing that stock available to me. So I can navigate around that way on it. Along with this, the idea was, so this is the new key ratios taking over from just the simple valuation to a broader picture. If you want the valuation numbers, that's the first panel that comes up when you come in. That's the same things that were on the old valuation, but now it gives you the industry rank, and it gives you what the industry average is and the S&P average and all that. So you got a lot more context of it from here. Yep. So the other thing that came up was, well, I want to be able to compare this stock to other stocks in industry group. And so you'll notice there's a new tab here called Compare. And if I go to Compare, what you'll see here is when you go to compare, what it will do is it'll bring up your stock. The one I have now, I switched over to JP Morgan. You see here JP Morgan. But then you also see the 5 largest market cap stocks in that industry group. So you can see how those are doing. And so if you look at this, here we have, the largest one here, HSBC at, 788 billion. Then you got so JP Morgan was actually number 2, then you got Bank of America, so on. And what this will show you is, besides the current price of that, this is a 52-week chart, a 1-year chart. This shows you, in the case of HSBC, that their 52-week low, which was 32.68, was literally this time last year. They haven't been there since, so it was literally a year ago. And their 52-week high was right here on at 42.21. So you can see the 52-week high, 52. So in the case of Bank of America, a little bit. They're basically where they were a year. That line, by the way, is where they were a year ago. So you can see that it's gone up, or in this case, in Bank of America's case, flat, so on. So you get that little context. These nav buttons work the same way. You can go straight to a chart by clicking that for that particular one. And then we have here some additional things for to compare. So you have your performance over shorter term to longer term, where they're at in their percentile, by the way, in the case of JP Morgan, on the 52-week high-low percentile, it's at 101. That's telling me it's over 100. So that means that's a new high today for JP Morgan. Average volume, 30-day average, or current volume, average volume, and then, dividend information, valuation information, profitability, growth. So you have all this to compare. Now, not every company reports, like, for example, not all of, especially in the banks, not all of them report revenue per employee and all that. So if they don't have it, we don't show it, obviously, but it's showing you where things are on this. Now, and by the way, down here at the bottom, option stats across those as well. So you can see that. Now, same thing here, though, that if I am doing a shorter term trade, I care about different data points. So if I change that, now you're going to see that the data points are going to change to be looking at things I care about for more of a short-term trade. And again, same thing, if I go up to the investor view, it's going to do the same thing there and carry that out as well. So we help you out with that. Again, the default view is going to be a balanced view on that. But here's the other thing about this. But the thing is, I want to compare different things here. So I don't care about HSBC, but what else is in this industry group? So I click on that and I can now see, and by the way, the ones that are grayed are the ones already on my list. You can see those there. But if I go down here to, let's go to Citi. So here we got Citi back. So I click on that. Now I've got Citigroup up here as one to compare to. So by clicking on the industry, you're going to get the list. You can choose any stock in the list to replace that stock up there. You can't replace this one because this is the primary stock you're on, but all the rest of these you can, in fact, change. But you're not limited to this group. So I can, for example, here, if I said, I don't really care about Bank of America, what I'm curious about is how does Apple compare to this? And I can literally do any stock I want for this compare, and it'll bring up those metrics to compare that. It doesn't have to be the same industry group, but by default, we keep it within their peers, right? So, but again, you can change that to whatever you want to on that. And it's a really quick, nice way to be able to compare what's going on across different stocks. And by the way, a nice way to be able to, it's a little bit of a sanity check here. Say, I'm looking at Apple, or let me go to ABBV for a second. I'm looking at ABBV and the pharmaceuticals, and I'm looking at, well, what else is in here and how is it performing this? I mean, look at Eli Lilly, look at where it's at a new high. In fact, if I look at my, it's at a 99 percentile of the new high. Here's 99.8 percentile of the new high. So both these are kind of hitting new highs. This is on a nice, but I was looking at ABBV, and maybe I'm going, hey, looking at this, that may not be what I want to do. Right. So it gives you a really good Pfizer, look at what's going on with Pfizer down here. Right. So, so it gives you a nice way to, a little sanity check on, hey, is this the right stock to be looking at in that group, and so on. It gives you the ability to do that. So that is the compare feature. This is actually, we've had tremendous feedback on this, just because it does give you that ability to, in the same context, look at different ones across that. So that is a little bit on the compare feature. And then a couple other things that we want to talk on here. If let me see it. Let's see. I'm changing my order slightly just on the flow, because I got into our whole expansion of data and how that affected our screener, our watch list, our fundamentals, our key ratios, and our compare, that all was able to bring that in because of the work we did on expanding our data on this. So I wanted to bring that up on there. Now, a couple other things that I want to mention. There's also another new feature in here. And I'm going to go over to my other one for this, because I have some things set up for this. So we added another new feature on our first step into AI. And the if you go on any stock, you go into the activity tab and you click on the AI analysis. This will give you a competitive analysis on this stock. Well, let's just look at it. So what it's going to do is it's going to do a strengths and weaknesses report on the stock. Now, this is completely AI generated. You'll notice it says beta. This is AI generated competitive analysis. What we do, just so you know, what we do with this is we send over as soon as when you click on this, and by the way, if there's one that hasn't been looked at yet today, it can take up to 45 seconds to generate the report. Once it's been looked at, no matter who looked at it, they're available for you instantly because they don't change throughout the day unless there's a big price move, and then we address that. But just to let you know, when you first come in and click it, it could take a second, up to 45 seconds for it to do the analysis. Because what we're doing is we're sending about 80 data points for all the large and mega cap stocks over to the AI engine, having it do an analysis of this stock in comparison to those other stocks, and comes up with the analysis on this. And so you'll notice here on this one here for JP Morgan, strong financial performance, right? Stable dividends, paying out a decent 2.5% nearly on dividends. And they have a low debt to equity ratio. Weaknesses, reliance on traditional banking, regulatory stuff that's always a banking industry thing. And the competitive industry piece, right? So it says, and then it gives you a little summary on it, and the on that part. But then it also brings up what are other stocks you might want to consider in this group and why. So HSBC is another large, very large market cap, offering a diverse range of banking services and a global presence, which JP Morgan doesn't have. JP Morgan's a lot narrower in its offerings, right? So it kind of spells this out for you. So it's a nice way to get, what I'd say is, this is how I use this. Let me just share this. I look at it going, did I miss anything? Because it's going to call out the strong points and the weak points. And, sometimes I, miss something on there. And like, for example, let me just show you one that I thought was really kind of cool here. If I go to the J&J, one of the things it talks about here, wow, it didn't talk about it today. This is interesting. So one of the things that it was talking about before, and I just don't see it here today, is that J&J has a very diverse portfolio of product, right? It's not just pharmaceuticals. They have medical devices, they have consumer goods. So they have a broader thing, and it calls that out before. I'm not seeing it right now on this, but it depends on what it sees at the strength of the moment. But then it also mentions some other ones to look at. All right, so that competitive analysis, that's our first step into this. We actually have some additional things I'm going to share with you in a moment about that we're looking to do there. That's not there yet, but we're working on. So I'm going to share that with you at the end. But we do have that going on here as well. Then the other thing I wanted to jump into was some of the chart enhancements that we've had. So let me go over here to the charting. By the way, just a quick comment here as I leave this. AI analysis, this took us quite a while to really hone in. It does say beta. I don't take this as the end all be all. There was just a thing in the news recently about a lawyer that used AI to generate his briefs, and it was quoting cases that didn't even exist, right? So AI is not perfect, but it's one of those trust but verify, right? So you look at it and go, oh, that makes some sense. Let me see if that's really right. But it's a really powerful way to get a quick strengths, weaknesses, and other ideas piece pretty quickly. Okay, so let me go back over to charting now. So in charting, we've had several things here that, by the way, the question here is asking about what engine we're using for this. Yeah, we are using ChatGPT's, actually it's our 4.5 available on only on the commercial side right now. If you know anything about it, there's a whole bunch of things about how to prompt and how to get settings for accuracy versus creativeness and all that stuff. And there's been a lot to balance there and make sure that it's good information and not, fluff, number one. and accurate, number two, all that stuff. So we've been working a lot with that, but that is the current engine. We also are working with two other engines as well. We compare results and look at this, but the currently for the analysis we're doing, ChatGPT 4.5 is doing really, really well. By the way, and it's not like, oh, you could go to it and get that same thing. We have to send it all the data, and we have all this preamble about what we're trying to get it to do for us and all that. So, but it's a pretty cool piece. So the next thing I want to talk about here is some of the features that we added here on charting. And there's some cool things here that we've done for you that I wanted to highlight. So one of the things that we did actually last year was we added volume as a lower indicator on the chart. We also more recently added the average volume line. And of course, if you go to that, you can change what that is. I have it set for 30-day average volume. So, but you can, change that if you want to. So we've added that now to the upper chart. So that's there. The other thing we did was this is, and this one, there's a couple of things in here today that I'm going to share with you that were really things that were championed through by David. And this was one of those that came up. So if I draw a trend line, and I want to do a parallel channel, play with it. I want to look at what would it be somewhere else, but I want to make sure I preserve this angle of attack. And that's what we have now is the cloning capability. So I get that clone, and what it does is it'll generate an additional line, and then I can take that line and move it, like, oh, look, it's a similar trajectory, right? So I can, do that. So this was one that was added to be able to more easily clone. That also works if I'm trying to do, parallel channels or want to do some stuff there. But just to let you know, you are not bound by that. You could still, like if I want to take this one and move it around, if I want to grab, so if I'll grab this one here for a minute, and I want to change the lines, change how it's done. I can do all that stuff too. But it just doing the cloning gives you a little bit easier way to get there. So we added that capability. One of the other things that happened that we were aware of, and it was a very pervasive little challenge for us for a while, where sometimes you'll have a trend line that disappears. It didn't actually disappear. It's the data's there, but it's not showing. So we might as well say it disappeared. We have addressed that. The one thing about it is how we draw the lines are different in order to make that happen. So if you have trend lines that were drawn more than like 3 months ago, and you have a little problem with those appearing and disappearing, apologize. We're trying to work on how to get the history ones done as well. That's a little bit challenging for us. But the currently, if any of your current annotations that you add, that, by the way, trend lines, that also includes notes on the chart, text that you might want to add to the chart, or whatever, those should be a lot stickier now, and you shouldn't have that problem. I did want to acknowledge it was an issue. It was a pervasive issue. We have addressed it, and it's working out really, really well there now. The couple other ones we did add. So one of the, and this was also, there were actually, I'm not even telling you all the things that David championed through. David has been a phenomenal advocate for you guys to make sure you get what you need. And he's been really pushing a lot of these. So one of the things we added also was a 52-week high-low difference, right? So if you look at this, this is indicating that there were more 52-week highs than 52-week lows on the NYSE. You'll see NYSE right here. So I can do this for the NYSE, the NASDAQ, or the Amex. And then what we have here is this trend period where it says, hey, once it's showing as more new highs than new lows for 3 days, it's starting to show that bullish trend. But I can also change that to the 5 days or whatever I want to there. Now, this chart is not specific to this chart. This indicator is not specific to the upper chart. This is looking at 52-week highs and lows on the, in this case, New York Stock Exchange. Again, if I want to change that and go, let me look on the NASDAQ, I can do that. It'll update. Now I'm looking at the ones on the NASDAQ. And then I can define, go back to New York because that's kind of the default on it. And then I can define how many days does it take to establish a bullish trend or bearish trend, right? So it just gives you context. I mean, it's actually technically very similar to what's what's here on this. However, if I go look at 3 months, whatever. So, but what we've done here is we've brought it in specific onto the chart so you can have that relevance to the chart itself to look at. And then one of the other ones we've added in is TTM squeeze. And again, if you want to know a little bit more about this, if you click on any of the indicators that have the settings in it, it will tell you, kind of what that is. So it expresses a little bit there. So those are a couple of new indicators we've added on here as well. And then the a couple other things that we have too. If you want to move around your chart now, you can move around the chart. If I hold the shift key down and then use the mouse, I can now drag this around however I want, right? So, we've always had the capability of expanding my view. With this, I can look back further in time by sliding the navigator bar here back further in time. But if I want to just move the chart around, just holding the shift key down, grab anywhere on the chart, and it allows you to move it around so that you can get it to where you want. Okay,
Rance,
so
I didn't even know about that one. That's fantastic. I love that.
It's really handy to yeah, it is. It's a nice one. I see some hearts coming up at me, so I appreciate that. Yeah,
Great.
that was a relatively new one that went into, so that is there. And then a lot of people like that. Nice. So the other thing that we also have added here on this, well, let me say this. It's not there yet, but it's a little precursor, little thing that's coming up. Oh, let me save that. I'll save that to the end. I'll save all there's 3 things that we have coming up. I'll save all those to the end on this, but it's pretty cool. So let me shift over one more thing. I want to talk about some of the options changes that we had. Now, last year we added the dashboard, or the picker, so I could pick which expiration cycles I wanted to see. Just so you guys know too, because this isn't necessarily so obvious. If I want to select multiple, I can do that. Then I go down here, OK. However, if I just want to quickly get one up, because that's what I care about, all I have to do is double click. I don't even have to mess with that. It just, it's a quicker way to get there. So that is in there. The one thing I want to mention, this is, if you want to go to the Help Center for what this is, it's right here. I just want to mention the one really important one here out of all the stuff on this page. Well, I would say the 2 important ones. One is, where's the current IV compared to its range? So if the options are relatively cheap or expensive. But the other one is this liquidity marker. This, we've had so many times that people get into, especially spreads, where they do a bull call or a bull put spread, and they just can't get out because the bid ask spreads between the options are so wide that you just can't get out early on the trade. Or if you have a bull call spread, it's trading up, I should be in profit. But because of these wide bid ask spreads on the options, it becomes difficult. So this liquidity ratio, this liquidity rating will help you with that. And by the way, liquidity rating is also available on the screener and all that stuff too, if you're looking for stocks with high liquidity in their options. What this actually looks at is several different points, but liquidity was what resonated most with people, so it's where we're using that. And we talked about using tradability, a couple other things. What it's looking at is 5 different things: open interest over volume, overall volume on it, volume compared to of options compared to the stock, so on, and it comes up with this liquidity rating. Bottom line is, if it's up in the upper part of the green here, you're going to be solid, not hard problem getting out. But if it's not, you can have, if it's down in this yellow or worse in the red, Those can create what we call roach motel trades. You can check in, but you can't check out. And that so just watch out for that. So I just want to mention that one because it's a real important one. We've got great feedback on it, and it's worked out really, really well. Couple of things we've added here, though, that I want you to be aware of is that there are times where you may have more than one trade on at the same time for a particular stock. And so what I happen to have here is I have JP Morgan, and I have, you look at this risk graph, what the heck's this? Well, what I did was I did a covered call, and then separate from that, I did a bull call spread. And in the past, all I've been able to do is look at either there used to be a existing tab over here, so I could look at existing trade, or I could look at just the new trade I'm considering. But when it was an existing trade, it was everything. And this was one that David really championed, and this was not easy to deliver on, but having delivered on it, I see just even more value than I initially expected on this. And what I can do here is I can break down what I want to look at. So for example, let's say I want to look at the covered call. So in the covered call, I did a 45, I did a 145 call. So I did a 55, I'm sorry. I did a 55 covered call, and I did a 145, 165 bull call spread. So if I turn off my bull call spread, now I'm looking, oh, you know what? I'm sorry, my mistake. There you go. There you go. I did the 165. So this is my my covered call, right? So I can see here, and by the way, notice these numbers change. If I change this, these numbers change. Okay? So what happened here was I did a covered call, and now I want to look to maybe adjusting that covered call, right? So what this does, I'm kind of showing you a double whammy here. First of all, I can now look at an individual trade. So if I'm looking at this, let me go back now and look at my bull call spread. This is my bull call spread, right? So I'm able to break it down, and you can choose which legs, right? Now, the problem is that this is just inventory, not problem. The thing is, this is just inventory. You might have entered it as a bull call spread, a covered call, but now you can do whatever you want with it, right? So it gives you the flexibility to look at it however you want to look at it. But let's just go back here to the covered call for a moment. So I'm in a covered call, and in my covered call, I'm currently short the 165. And let's say that I want, wow, well, this has gone up, but I want to give it a chance to move up more, because right now the stock's at 172 and I've got the 165. So you can see it's going to take me out here. So what I could do here is maybe look at, let me do this, bring in next month just to show you this. And so I'd have to buy this back. So let me do that. And then, oh, wait a minute. Whoa. Hold on. Before I do that, it's a little thing on a little helpful hint. If you're going to look at making an adjustment on the trade, and this isn't just for if I have to select here, this is any of this. If I have an existing position on, and I'm going to look to make an adjustment to it, but what you want to do is once you have that position up, take a snapshot, right? You can compare multiple trades. In this case, I'm going to take a snapshot of my covered call as it sits right now. Now, let me look at making an adjustment to this. So what am I going to do? I'm going to buy back my 165 for this month, and then I'm going to go out to next month and look at, I could go up to the 170 now. That's going to still cost me a little bit because I'm having to buy this back for 870. And so if I go up to here, I got $2 in it, but I've got another $5, instead of losing it at selling it at 165, I'd be selling at 170. So let's just take a look at that. What would happen if I sold that? And then what happens is it's showing you the risk graph of the two. Now, because these are different timelines, right? Because I went out another month here to the Febs, you're going to see this arch curve for this one. But if you look at this, you'll see here that I have more upside on this, right? But I am taking on a little bit more risk. So I can choose if I want to do that or not. But if you decide you want to do that, what happens now is when you hit the trade button, watch what takes place here. It's going to it knows that you're buying to close and you're selling open. It's a smart ticket. It knows what you need to do in the position to make that adjustment trade flow. So that's that's available to you. It's again a smart ticket system for that if you make an adjustment. So it's a really cool thing to be able to isolate a trade, see how that part of it's doing, and then look to make an adjustment on that. So if you have multiple trades out there, that it will let you isolate what you want to isolate. Even if you don't have multiple trades out there, again, that adjustment thing where take a snapshot of your stuff, take a look at it, and you've got that available to you. So it's a kind of a nice way to be able to work that. All right. And once you get, I don't want to get too far into adjustments and that here, but one of the things about this is once you get good at being able to do adjustments, if you put on a trade that goes wrong for you, you can still, work it. And this capability I just showed you really, really helps with the ability to do that. So, so that's something to consider there. So, all right, next one I want to talk about here is another feature we added that it's a little bit advanced, but at the same time, it really can help you understand how you can, how a trade's going to behave in a particular scenario. So if you look at this here, what I just did was I did this is a bull put spread on Amgen, and the stock right now, if the stock just does not drop below where's my break even? Our break even is at 291 and the stock is at 302. So if it doesn't drop $11, I'm going to be above my break even point, right? So, but you make money on time here, right? So what we've added, and this is one example, you can look at this a whole lot of different ways, but what we added here was price slices. So watch this. This is a very cool feature here where I click on price slices, and now what it gives me is it gives me 3 lines here. And the way this works is the blue line, this first one here, this one here is always considered your entry point. So at this point, it would put the trade on at the current position, at this exact position. If, however, I'm looking to say, hey, well, what if it, I'm looking at getting in when it drops down to here, or when it goes, so I can look at this and make a change where I'm going to plan my entry point. Now, the thing about that is once I've done that, the subsequent lines, in this case, I've got 2, but you can add more, will calculate your profit or loss, your anticipated profit or loss off of whatever that blue line entry point is. So even if I, again, default, it's the trade as it is right now. However, if you move that, it would calculate that as the entry point. So then if you look at this here, if the stock were to go up to 317, it just does a 5% up and down as a default. You would make, by expiration, you would make $269, right? Well, guess what? That's actually going to happen anytime the stock, we can grab this. So by the way, on the chart side, you can grab these and move them, right? So I could increase or decrease where that is. And as soon as I let go, it puts the chart over here, and it also does the calculations over here. So in this particular instance, let me just go right down to here, because if I actually I even go, and by the way, this is actually really cool. I can drag the line wherever I want. It's going to put in the price. I can put any offset percentage. That was my little, do this by mistake. I have a little thing here that's a little different than what you guys are going to have on that. So let me do this. Do this. Okay. All right. So so if I go, well, what's this going to be if the stock were to go up by 3%? So I could change that to 3%, and it will calculate out the rest of that. Or I could say, well, my upper strike's 295. So what would happen if this went to 295? And it'll calculate out what it is on that particular point. Now, this is today, right? This is today's entry, but this is out to February 2nd. So I could go, well, wait a minute, what would happen if I went out to February 2nd? By the way, you'll notice that the furthest out it goes February 2nd, everything else is grayed out because that's expiration, right? So look at that, $264. So wait a minute, what if I did, let me add another line. So I can simply add add a line, right? And now what I want to do here is also go to that same 295, because I want to show you something. 295, right? So both these lines are at 295, so they're both right on top of each other here. This is today. I've got a loss. Why? Because that's the bid-ask spread. That's what that's actually going to represent. If I hold this to expiration, it's going to make that. Well, what happens if I hold it not to expiration? What if I just hold it to, you know, the 22nd, where I'm still down, right? So I can look at, well, where do I get into? So if I hold it to the 29th, now I got a profit. And that's because, you look at this right here, that's because of that time decay component, right? So here's what I want you to follow on this. I can come up with whatever price assumptions and date assumptions I want. I can put those prices in. I can do it by percent. I can do it by dragging the lines over here and, you know, entering whatever date I want. And from that, it's going to tell me what my theoretical profit or loss would be. It's going to tell me the value of the trade, right? So in this particular case, 390, I got in for a credit of, this is my entry again, 378. If it goes up to this, it's now worth 113. The difference between that's my profit, $264. Right? So it's going to calculate that theoretical P&L. This tells you just what the value of the whole trade should be on that day. And then we also have in here the Greeks for you as well. And then I also get rid of any line I want to get rid of also. There's one other thing we did with this, and that is, so first of all, actually two other things to do this. So first of all, this gives you the ability to really operate off of, hey, if it goes to this point by this date, where I think I'm going to be, both on a profit standpoint and a risk standpoint. Like what you'll notice here, the risk line is kind of at that support level, right? So what's my risk factor to that? Well, you know, it's you know, I could lose you know, $500 on that, right? So you can say, hey, if it breaks that support, what's that going to do to me? And I could come up with those numbers, those expectations, right? So nice thing to be able to use there. You can also adjust volatility up or down. If you think it's coming in earnings and volatility is going to go up, you can adjust that here too. The other thing you can do here is this little go big button will break that off. Now we set it up so that I can go over to my chart. I can go look at numbers on my chart where I have additional technical analysis going on here, where I have different indicators and different things that I can look at. And then from that, go, oh, okay, I want to use this price over here, this price. So you can, you know, use your full charting to be able to do your assessment of where you think something's going to be, where it might trend to or whatever, and be able to plug that number in over here and get your theoretical profit or loss based on that. The other thing that you can do here, and actually I'll even show it to you the right way. Let me go to a condor for a second. So this is a condor trade. Same thing out my price slices here. But one of the things that sometimes people will look at when they're doing that is they want to go, hey, what I care about is I want to see what my theta is going to be or my delta is going to be for just the body, right? The part I'm selling. And then from that, it might change what my wings are going to be. So what this has the ability to do is select which legs you want to do the analysis for. So if the reason I swapped over to a condor here is because a common way to look at this is, by the way, you have to select them and then submit. It does the calculations for you. So you can see here how this is played out and what those, you know, what those Greeks would be for just honing in on the trade a little bit. So it just gives you the ability to really assess and calculate out what that would be and literally at a down to a leg level for whatever leg you want to do. By the way, one of the ways that this is kind of cool is if you want to look at a spread versus a just like a long option, and you can do the spread and then turn off the one leg and see it, and you can see how it would behave at different prices. It's kind of an interesting way to get a little more insight into the behavior of a specific strategy. So price slices, also something here that we have added for you. And so we've expanded a bit on that options functionality side. Okay, so those are some of the new pieces. I have a couple things I want to let you know about. This one is probably, it'll be this month. I'm hoping, well, if I was at a boardroom table, I'd get kicked if I set a date. So I'm going to say within the next few weeks, this feature will be out. What this feature is the ability. Let me go. I want to clear my annotations to show you this. Actually, let me go to a different stock here for a second, and I'm going to go to just the default view, so it just makes it cleaner. And what you'll notice here is that I can. Oh, no, I have an existing, so let's not do that one. Hold on. Anyone? So I'll do this. So that's fine. Okay. Just setting up so I can show this properly. So this is not going to be the button. This is just for our development. What will happen is the trade button that shows up here, if you have a position on that you could close out or whatever, right? So, well, now that trade button is going to feature, do one more thing for you. And that is, if I click that, you'll notice that what comes up here are 3 lines on the screen. And this is basically trade from the chart. Now, I've got a buy up here. So if I want to sell short, I could do that. We're going to stay with the buy side of this. The blue line, that's my limit entry price. So if I want to go, I want to get a little bit better than this. I want to, let's say I want this to come down to about here. By the way, as soon as you clear that, click it, this goes away so you can see the whole thing. And then, so I got my entry down here a little bit. So I'm hoping for a pull back on that. Here's my target price. And so I think let's get up to a new high. What if it hit that new high, right up there where it had been before. So I could drag that up there, and then, I can move my stop to wherever I want my stop to be. And then once you have them how you want visually, just click any line without dragging it. This pops back up and you can see what this is. Now you can also change this. So if I did it visually by dragging the lines, and that's the prices. However, if I want to work that a little bit different, I could do that. I could either enter a price that would take that, or I could enter a percentile gain or loss, and it'll show that. So, one of the things that we talk about a lot at TRADEway is setting yourself for a 2-to-1 reward to risk ratio. So if my profit target gives me a 6% gain potential, I want to make sure I have no more than a 2% loss potential in this. And that would give me, and no more than a 3%, right? So in this case, I have 2. So that meets my greater than a 2-to-1 risk reward ratio, right? So, so I can see all that here. This also will show you on we did quantity 1 for a reason here, because I got 2% risk. My risk between my entry price, and my stop is still $12, even though it's only 2%, it's still $12.73 a share, right? For doing this trade, because it is a $600 stock, 1 share is going to cost you $600. Well, you go, hey, I'm going to take on $1,000 of risk here. So if I type in $1,000 of risk here, watch what happens. Hit enter. Well, it actually is not. So what it does, notice the sizing, it sizes it for you. It's not exactly $1,000 because we're not dealing with fractional shares here with the brokers we have. So if I went up 1 more share to 79 shares, now I'm over $1,000. So it's going to always make sure that it's the below whatever you entered in, but it's going to go like the closest share count to that. And then it tells you, well, that's also $50,000 worth of stock. So that might impact your position too. I'm doing this on a $600 stock, so it's up there. But once I have this position the way I want, let's say I'm not willing to put 50,000 in, so let me take that down to, let's say, take it down to, let's say $200 of risk. And what would that be? That'd be 15 shares. Okay, we'll do that, right? So if I do that, when I hit the trade button, what's going to happen is, and actually, I got to do something real quick. I did that because that does not work with manual accounts. And I was just on a manual account. So let me just go to let's just go to this one here for a second. No. I'm not going to be able to do that here. There we go. There we go. Yep, there we go. Okay. So let me, because I want you to see how this works. So let me pull that back up. I'm going to leave it with the defaults because I just want to show you how this works. So once I have this set, let me go to the $200 of risk though, so I can see this. Okay, it came up with 12 this time. And I hit the trade button. What it's going to do is it's going to fill out your entire bracket order, right? So I had a position on here, so it did that, but it's going to, this is exactly what it would do for you. It would have your limit price at what you had. You've got your bracket order with your target. So you got your limit price to get in at 646 with a target of 679 and a stop of 630. If you want to put a stop limit in, you can turn that on here. You can also change the period on that. And then from there, you place the trade and it's going to go in and you'll have that entire bracket order placed for you. So, and right there it is. That's the bracket order working for you. This is showing you that the whole order is working. As soon as this gets filled, those will also still be here as working orders for you, but you immediately see the trade on here ready to go. So actually not ready to go, out there in, placed for you with a full-on bracket order. So trade from the chart gives you the ability to do it visually by just dragging the lines around. It also gives you the ability to enter the prices in manually, and also gives you the ability to do a percentile profit and a percentile loss that you're willing to do, and then also does sizing for you all in that one feature. And we're looking for that to come out within the next couple weeks. So
Rance, that looks fantastic. We've talked about this before. You've mentioned that this was coming in some previous meetings that we had, but this is my first time seeing this too on the chart. I love it. I love it. This is great.
I'll tell you what, there's been a few things we've done in the past. And I'll tell you, one of them was option templates. Here's a guy that's been trading options for a couple decades. I don't need the templates. I want to use the chain because I can go create whatever I want. But then I find out that, the template puts guardrails on for me. So I'm doing what I want to do, and I can go do it quickly, and I see my calculations for me. I don't have to do those in my head, all that stuff. I find that I end up using that a lot more than the chain nowadays.
Nice.
This in our testing, I've already found myself doing that. Why would I not go set it up here and be able to do that? And by the way, if I don't want to put a target on, but I do want to put a stop on, I can turn off the target. Right now, I've just got my stop, and it'll fill out the ticket accordingly. Right, which is a common way that I would do it. Now you're going to see both because I have the existing trade we just did. But then you drop, put that line where the support is, and So it's a really nice way to be able to do this. And I've been, I'm glad you recognize that. I definitely see that. Let's say others. I see a question here from Christy. Let's see, we'll have the.
I was going to ask you to, why don't you handle that one?
Oh, yes. Okay. So I'm sorry, it took me a minute to read that. Yes, you will be able to, depending on brokerage. So part of this, Christy's question here was, I be able to have on a one cancels the other, so I can have a target price and I can have a stop at the same time? And the answer is absolutely yes. You will be able to do that. And by the way, let me just show you something on that. If I have an existing position, let's say that I was in a trade, and let's go with one that's not showing too much profit yet, because the way I want to do this. So applied materials. So here I have applied materials, and I bought the applied materials at $41.79, right? So if that's the case, you're going to see a trade button up here, right? Because I could close out a trade, right? So, and by the way this trade button works is if you have a position on, it'll show up because you could close it. If I have a position staged, it will show up because you could fire off your stage. Now what's going to happen is this is also going to fire off that trade from the chart. So all three will be there, and it'll give you the choice on that on which one you want to do if you have multiple things that I could do. But here's what I want you to see here. I have here a existing position on, right? So what you just saw, I jumped the gun here. What you just saw was a full bracket. I'm going to enter the position and set up my exit order at the same time. Well, I can also come in here on a position I have on and set up my exit positions here as well. So the stock's at 50.38. Let's say I think it's going to bounce back up to maybe 58. Let's go 58 for just discussion here. So I'm going to call this 58. And then I want to put my stop. I don't want to lose this gain. So if it comes down here to 144, I'll put my stop at 144. And now I'm putting on that bracketing, the OCO, on an existing position, right? So, yep, I can do that. So I'm gonna go ahead and review, and I'm gonna do that. But then the other thing I could do, and now what you see here is, this is my current position, and I have a stop at 144 and a target at 158. Shows me those are both there working for me. First one of those hit, it'll execute and cancel the other one. If I'm doing this on a totally new position, on something I don't have a trade on, now I got to find one I don't have a trade on, so then in this case, if I were to do the trade from the chart thing we talked about, you saw that, right? But the other one is right now, today, again, depending on brokerage, if a brokerage supports it, we do it. So here I've got my entry at the current price, and then I can go put my bracket in, and then I can go, okay, well, I want my bracket up here. I want this at 360. And I want to put my stop down here at, well, that's too much risk. Let's go, maybe put my stop here at 340. There's my bracket order. And, and it spells out right here, you're buying 100 shares, again, put whatever quantity you want in, buying 100 shares at $347 to open. When filled, sell at 360 with an OCO to stop you out at 340. So if I'll just go ahead and do that. Bam, it's got the whole trade. There it is. So I can do it today. Oh, that's because I did too big of a trade for what I had in there. All right. So it was I did 100 shares with $340 stock, and I didn't have much cash. That was why it rejected. But anyway, so you could put on a bracket order today by just simply choosing that on the exit side of the order, and it's all in one nice clean ticket. You got your entry on the left, exit on the right, and with this trade from the chart function coming in, you'll be able to set the whole thing up again visually, or by percent, or by dollar. Do your sizing, and then send that to the ticket accordingly. So, and again, a couple of weeks on that, and we'll have that one out for you. So that's coming up. The other thing I wanted to let you know, I mentioned the AI part of this under the activity tab, the AI analysis that we have there. By the way, here's what you'll see. I don't have this one done yet today, so it'll take take up to 45 seconds. It'll go across and do that. But beyond that, the other thing I wanted to let you know is there are two other areas we are, we'll call it in the lab with. One of them is really challenging. The other one we're about 85% on. The one we're about 85% on is you'll be able to ask the AI engine to do a technical analysis assessment off the chart. So there'll be an AI button over here. With the click of that, it will assess this chart and give you insight as to support resistance points, trend points, things like that. That one is coming. And the challenge I have with that right now, and I'll just tell you, because it's been in months and works, is that I'd say that 85, 90% of the time, it's like right on. And then there's about 10, 15% of the time that it's seriously out to lunch. It's like, wait a minute, what were you thinking? Right? It's like, no, you're telling me a support level is no, it's just way off. So that's all in, it's getting better and better, and, we're getting better at how we're communicating with it and all that stuff. So that's one that we're working on, but that's one that we look to have come out. I would say that it's being safe with it. Let's call it second quarter, maybe before, but right now it's probably where our target is. The other one that we're looking to do is, and this is the one that's really complicated, because we have 3 terabytes of data on company information. It is a huge amount. And getting your AI model to work with big data is challenging, and we're working. But the idea is, instead of you coming in, well, you'll still be able to do this. You'll still be able to come in and do your screener exactly how you do today and pick everything and, do the ranges and all that. But we also want to have it where you can have a free-form dialogue, back and forth conversation with the AI engine to find things that you're looking for. So I'm looking for, good, stable, fundamental companies that would be good opportunities for covered calls that have a decent monthly return, and it comes up with a list. And what it'll also do is tell you what factors it used to do this over here on the left-hand side. Just like if you had a scan today, it's going to tell you that stuff. And so, it's going to give you all that information, and you can tweak it and adjust it. But you could also keep going with it. Like, for example, right now, I have 591 stocks that fit this criteria. That's too many. Let me hone it down. How can I have, again, a back and forth dialogue to be able to hone it down to what you want? And then as you do that, with not having to know, do I want standard PE, or do I want gap PE, or whatever? It'll have all that information. It'll make those decision points for you, and it will show you the decision points. Will show you what the result is. And then if you want to, you can tweak it by either changing the numbers here or having, again, dialogue with it. You might want to bring in another data point you weren't looking at. I want to make sure that it has, that it's a large cap or mega cap stock, whatever, so be able to do that kind of thing. So that's the other one we're working on. So those are the things that are coming up. The trade from the chart coming up very, very soon. The AI analysis of the chart, I'm thinking end of first quarter, second quarter. And then this one here, where we can have just free-form dialogue over the whole set of data, 25,000 stocks, 1,400 data points per stock, that it's going to be able to go through and do the stuff and tell you what it's looking at. That one, the answer to that is when I get over the hurdle of dealing with big data, because that's a challenge right now, and we're working on that one. So, but that's our goal. So those are some of the things coming up. The soonest one of that trade from the chart, which I'm really looking forward to, that one's coming very, very soon. So we look forward to doing that. So I ran a little bit long on this today. I covered a lot of points on this. That's where we're at right now on what we did the last year. I mean, a lot of stuff, some cool things coming forward. I don't want to mention all the elements of coming forward because I don't know our development track yet on some of this, but we have a lot of cool things that are going to be coming up. One thing that is going to be happening is that we will this quarter be adding 2 to 3 brokerage firms. I say 2 to 3 because one of them has a challenge that they're trying to overcome, that will allow us to do what we need to be able to do. So if they manage to deliver, we'll have that one. So it'll be 3, but those are coming up. So we'll have some additional choices there. Also, for those of you who had or have TD Ameritrade, they are going to open up the API for the entire Schwab customer base. We're actually already approved and one of the first adopters. However, they have not yet released it. As soon as they do, we are going to be on it right away. So that's actually, I guess, a fourth one that will be coming on Schwab. And then as TDA people migrate over there, that'll be the case. Oh, last one I did not mention, one little final one. If you have an account, a real account at TRADEway, we negotiated a deal with TRADEway where now for all of your, well, not for all of your watch lists, for everywhere, it is streaming data for free without, so right now we have, if you want to add streaming data, you can activate Quote Media, Quote Stream Connect. You pay them, it works in our platform. However, if you have a TRADEway real account, you get, and you've signed your exchange agreements at TRADEway, you get free real-time streaming into the platform, no additional cost at all to it. So it'll come in there off of your TRADEway account. We're looking to do that with some others, but right now, TRADEway worked with us and partnered with us to make that happen. So that's also currently working if you're in your TRADEway account. So with that, David, I know I went a little long there, but a lot of stuff happening, a lot of cool features, a lot of things on the horizon. And we've been excited to deliver these items in the last year and look forward to, doing a lot more in 24.
That's huge, Rance. Thank you so much for all that information and lining those things out for us. Really appreciate that. Guys, if you do not have Charts by TRADEway yet, there are several ways that you can get it. So I'm going to go over those real quick. You can see in the chat box that Misty has gone ahead and posted several links. Those links for Insider Plus, Trader Max, and Trader Pro, those are our support subscriptions, and that comes, well, each one is a little bit different. We're not going to do a deep dive into them right now, but if you click on those links, you can get that deep dive, right? So Trader Pro offers coaching. Trader Max also offers some webinars. Each one of them is going to have Charts by TRADEway. Trader Max and Trader Pro is going to have the elite version of Charts by TRADEway, whereas Insider Plus will have the basic version of Charts by TRADEway. If you are thinking, hey, I only want the platform and everything that we saw today, well, you can use the link at the bottom of what Missy posted there, basically just chartsbytradeway.com. And you can go ahead and subscribe a la carte to Charts by TRADEway. So several things there for you. Also want to drop another link for you in the chat here. You may have questions about, man, I still got questions about how to do this or how to do that in charts. We have many videos for training specifically set up for you. So the link I just dropped is to our YouTube page. I believe there's 32 videos right now, training videos in there for you. We're going to continually be adding more in this year. In fact, this webinar is being recorded and it will be added to that YouTube page as soon as it's gone through compliance and everything. So probably sometime next week, you'll see that video pop up as the 33rd video for training in the YouTube page there. Also, one final thing I want to mention as far as training goes is Rance's team hosts what's called office hours twice a week. This is on Wednesdays and Fridays. I go ahead and I think every Tuesday I go ahead and post in the community page, hey, check out the office hours. Here's the link. Here's the times. So that's going to be one of the fastest, easiest ways to get a hold of office hours. And what is that? It's generally just question and answer. So it's not necessarily a presentation that is set up. It's, hey, let's come together. And if you have questions, you can ask those questions. And Steve and Lori do a great job of answering those. With that, I want to give us...
I just want to make a mention on that. If when we do a release, sometimes the office hours will highlight. We also do monthly trainings on the whole platform that are 2-hour sessions, 90-minute 2-hour sessions, and those will be posting up soon. You'll hear about those. But the office hours is freeform. What we will do is highlight a new feature that just came out sometimes and go into that. But the real benefit of it, it's whatever you want to know about how to do whatever in the platform, right? It's just a freeform thing. You can ask a question and we'll, the team will show you how to do that part or how to use a particular feature, get most out of a feature. So it's really driven by you guys and what your questions and what you want to hear about. So it's a really powerful one. The trainings are also really great. You guys see the whole thing, but the office hours are really particularly nice because it really gets into the heart of what you want to hear about.
Fantastic. And yeah, Steve and Rance, Steve and Lori lead those on Wednesday and Friday. And I just wanted to say a special thank you to also Steve and Lori. And, Rance has a whole team behind him. It's Steve, Lori, you got Chattel, you've got Chris, you've got Carlos, you got others. There's a lot of people that are putting a lot of work and effort into getting not only the new things into the platform, but keeping the whole platform running. And, as I've learned more about how this platform works and everything, this isn't one big engine that's running. There's like 3 big engines running all at the same time, and it gets kind of crazy, but they make it happen. They make it happen. So I wanted to say a really special thank you to all of them. And of course, to Rance for giving your time and teaching us all the things that we learned today and that are going to be coming up as well. And finally, I want to thank you guys. Thank you for investing your time. This solid hour and a half that you invested in your time of learning the tools that you're going to use in trading. So I want to thank you all for that. With that, have a great day, guys.